Good evening, friends. In front of you, normally I don't come on Monday because we have stock of the week in the morning, and then we don't do webinar in the evening. But the reason I'm in front of you because, as you all know, the stock of the week has been postponed to tomorrow morning, and the reason is very simple because we are all offsite. The complete markets mojo team had gone out of Bombay as an offsite, and due to that we had to delay our launch of stock of the week to Tuesday. And since this window was available on Monday, I thought let me do with the equity outlook. Again, a lot of data, how to interpret that data, and it's a very interesting analysis that I'm going to discuss today. And of course, post that we are open for that question and answer. But before I begin my presentation, is disclaimer that this webinar is just for education purpose. Please consult your financial advisor before buying and selling any stock. Past performance is no indicator of future returns, and investment securities market are subject to market risk. So let me begin with the highlights. We saw in the month of March, market moved up, and that gain got extended in the month of April too. This is despite tariff war between US and China. This is despite the fact that India, Pakistan, because of terrorist attack in J&K, but market did manage to close in the green. What was really very, very good thing is that the advance decline ratio was extremely good. But having said that, the large cap outperformed the mid and small cap in the month of April. That was not the case in the month of March. In the March, mid and small cap did better as compared to the large cap. But in the month of April, large cap did better than the mid and small cap, which clearly gives it some indication that when with the situation a little volatile, people prefer to remain invested in the large cap, not in a mid and small cap. Another good thing is that we did not see 1 lakh crore daily volume on the cash segment on NSE going below 1 lakh crore. Couple of months in a row. Fortunately, in the month of April, we managed to cross that. So that again shows level of participation increasing in the market purely because of better sentiment in the month of March and then followed in the month of April. So when the sentiment gets sustained on a couple of months back, those who moved out of the market normally tend to come back, and that's what exactly is reflecting in the NSE cash volume. The attack on tourists in Jammu and Kashmir did impact the sentiment, but for a very brief period. In fact, even as we speak, we don't know how these things will take shape, how India is going to retaliate to this terrorist attack, and in turn what Pakistan would do. But there is this really did impact market sentiment in the month of April. Good news is that both SkyMet and IMD came out with the good monsoon outlook for the June-September southwest monsoon forecast, which is very good. And fortunately, there's one more element which has come in that prediction is that there will not be any La Nina effect. And that's why it is very important there is no La Nina impact, because sometimes when you have excess rainfall also, it does create disturbance in terms of movement of goods and services, number one. And number two, it could damage the crops also. So this time, they are saying that it will be neutral. There will no La Nina impact. And monsoon, like SkyMet has said, that monsoon would be normal. And the IMD is saying it will be above normal. So good thing, 2 years in a row, good monsoon augurs very well for the agri-produce. It augurs very well for the food inflation. It augurs very well for the RBI to cut interest rate. So I think that's another positive news that happened in the month of April. Inflation has been on a constant decline, and I think we are at 67 months low at 3.34%. So more than 5 years, more than 5 years actually. And what is a good thing is that inflation is likely to remain a little benign for the very simple reason: good monsoon, crude oil prices coming down, and so on and so forth. And that really is helping to keep the inflation low. At the same time, we saw RBI did rate cut in the April MPC also, another 25 bps rate cut was announced by the RBI. Total rate cut has become 50 bps, and RBI basically changed its stand from neutral to accommodative, which gives clear-cut indication that there could be more rate cuts that can come in the going forward, purely because of global uncertainty and because of what we call food inflation coming under control. While this is good, we must also understand that the global uncertainty is also playing its part on the global GDP growth. Not only world GDP growth has been revised downward, but India's GDP growth has also been revised downward. Let's start with RBI. RBI was expecting 6.7% GDP growth for FY 2026. In April monetary policy, they said India may not be able to achieve 6.7, but I think we should look at 6.5. Other agencies outside India, they are not as bullish as RBI. Like for example, Moody, which normally don't announce for the financial, but they announce for the calendar year. And for the calendar year 2025, they said that GDP would be 6.1%. And IMF, which revised its GDP growth for the India from 6.5 to 6.2. The one good thing when you look at, of course, I have not put all GDP growth forecasts because I don't want to bore you with too many numbers. But if you look at it, agencies after agency, everyone has been saying that no one has basically gone below 6% in terms of GDP. So I think somewhere we need to understand that we should be in the region of 6%, minimum 6% GDP growth. I'm talking real GDP growth, not the normal GDP growth. Somewhere in the region of at least 6% and above that actually. If inflation remain as we can see here, 3.34, and if the what we call the real GDP is 6.5%, we should grow somewhere in the region of near about 10% or so in nominal GDP. That's what the budget document also 10.5% nominal GDP growth that has been budgeted or projected to be in the budget document. Since tariff is a name of the game and that's what everyone is a little worried about, let's try to understand how India did in terms of the trade in FY 2025. Okay, export to US has been near about 86.51 billion. Okay, and when we look at from as compared to GDP, we are quite low. In fact, US is concerned. If you look at India, did a goods export of near about 437 billion. So India continues to remain more of a domestic driven as compared to this is only for the goods, don't get confused with the services. Services exports rose to near about 12%, while there was no growth in the goods exports in FY 2025 versus 2024, but services export did rise by 11.7% to 3.81 billion versus 3.41 billion of FY 2024. And because of the export did not rise too much, but the import did had a lot of impact in FY 2025. India's merchandise trade deficit widened to 282 billion versus 241 billion in 2000. Of course, one good thing that's going to play out is a crude oil price, and that should really help India. But then what we also need to understand what happens to the export side. That's the thing. Since it's a result season, very quickly go through that. Of course, I'm going to present that numbers also in my subsequent slide. So there are no major negative surprise. It's not that because of one company coming on negative result impacting overall market sentiment. It has been some in patches the numbers have coming, and because of that the things. And what is good thing is that these numbers are also having one day impact. Just to give an example. For example, Bajaj Finance, when they revised the target of ROA and loan growth, the script did move down by 3.5% post numbers coming out. And all that numbers have been recovered. And in fact, today it's quoting higher before the result came out. So if at all there are negative impact on the price, it's recovering very, very fast. FPI on the other hand, fortunately have turned positive Indian equity market. And if you look at, and of course we discussed that The month of Jan was the higher sale. In fact, it got reduced. It's got further reduced in the month of March, and in the month of April, we are in a positive territory. So somewhere FII have changed views on India, despite GDP growth has been revised downward. GST collection record 2.37 lakh crore, which is up 12.6% Y on Y. So this has gone up month on month also and Y on Y also. The reason I have not used month on month, because the collection which has come in the month of April pertains to the money that has been collected in the month, paid in the month of April, pertains to the money collected in the month of March. And March is normally a good month because of the financial year closing, and hence I have taken data only Y on Y to 2.37 lakh crore, which is up by 12.6% Y on Y. That's a good number to really talk about it. Let's shift gears and go to the global. We all know in the April there was a one-upmanship between the US and the China. While when US US hiked the tariff on China, China retaliated and further hike, and that really did not go very well. But in the interim, while the Trump did announce a base tariff and additional tariff, somewhere the senses prevailed, and Trump in April put a pause on that the tariff, the additional tariff for 90 days, even though the 10% tariff, which basically continues to remain in place, and it did really help a market to revive the sentiment. At the same time, US inflation cooled to 2.4%. It was expectation was 2.6%, giving some relief to the market. So US market was little concerned. Of course, we all know that the tariff normally increases your inflation. So still, this all the data pertains to pre-tariff period. So we need to wait and watch what's happening because of tariff, how much inflation is going up in the US and what kind of damage it could do to the US economy. While everyone, when the Trump has been saying that there should be rate cut and so on and so forth, despite the cooling of inflation, we don't expect FOMC to do the rate cuts day after tomorrow. That's the 7th May, Wednesday. We don't expect any rate cuts coming in from the FOMC. Crude oil price have taken a substantial decline, and there are two main reasons for that. And one reason really makes me worry is that the global slowdown. If economy slow down, I think it could create a problem even for the country like India. Despite we are domestic driven, there will be some spillover effect that can happen. And plus, the OPEC Plus have increased their output. So that's the two things which has happened. The demand has come down a little bit. I don't know the data exactly how much demand played a role in that, but it looks like that demand did have a role in that. And the supply increasing, basically resulting into a lower crude oil price. In fact, crude oil, as I speak to you, has gone below $60 per barrel. We all know that economic data in China is difficult to come by, and how much you rely. In fact, I was reading one article today, and it said that even though China claimed to have grown by 5% last year, probably must have grown only by 2%. But there are reports coming in. It's very difficult to verify the reports from China. So you should take these comments with tons of salt. But there are some reports which say that there is a slowdown happening in the Chinese economy. Some of the companies are asking their employees to go on leave because of this tariff war. The demand has shrunk, and demand has shrunk. Then what do you do? Why do we produce? And why if you produce, where do you sell those products? In fact, today in FT, a beautiful article came saying that China is looking at rerouting their product through Malaysia, so to escape more than 100% tariff on the Chinese goods. These are all reports. We don't know. We need to wait and watch. But right now, Chinese economy seems to be suffering from this tariff war. And if China slows down, definitely it could have an impact on the global growth. So this is the summary of what has happened. Let's look at some data very quickly. Advanced decline ratio improved in the month of April. We were 1.05, which increased to 1.26, which is very close to the kind of level that we saw in June when the election result was announced, and something in the month of April also we saw that. So it's a good thing, and 2 months in a row. So if you look at advance decline ratio, 3 months in a row was negative, and I think in the month of March it was positive, and so is the case in the month of April. India Inc. added near about 10 lakh crore in the month of April in terms of market cap as compared to March. We are at 424 lakh crore a market cap as of 30th April 2025 versus 450. And of course, we are very far off from the 475 lakh crore, which is almost a gap of 50 lakh crore. We need to still fill in from the high that we saw in the month of September. Again, volume, as I was talking about, 3 months in a row, we were less than 1 lakh crore. In the month of April, we did manage to grow above 1 lakh crore. That's a very happy sign. It does give an impression that somewhere the investors are making some amount of a comeback. Of course, the number is not substantially high, but that 1 lakh crore is a psychological level, and that does give a comfort level. Why? Because it was 99,000 crore, very close to 99,000 crore in March 2025. But 1 lakh crore is a little happy sign, which that continues to be there. Bank Nifty was the best performing sector in April, so is the case with Nifty FMCG. Consumption as a basket is making a comeback. It's 5.56. Fortunately, large cap did well as compared to mid and small cap. Why am I saying so? Because Sensex and Nifty moved near about 3.5%, while mid cap was up by only 3.2% and the small cap was up by only 1.63%. Of course, metal and IT continues to remain little subdued, and they close in the red. If you look at the Nifty 50, Indices Bank is on the top of the chart. Nothing to do with the fundamental, more to do with the CEO and the deputy CEO and the CEO quitting. There is a hope that new guy will come and they will clean the books. Tata Consumer did well purely because of the FMCG consumption basket doing well. You can see some of the insurance companies in the list like SBI Life and HDFC Life, purely because of, I think, somewhere it looks like that the life insurance companies are making some amount of comeback, and it is not only for a couple of companies. If you look at across the life insurance companies, many companies are basically getting a lot of traction. You see on the right hand side, lot of IT companies, Wipro down by 8%, Infosys down by 4.5%, TCS down by 4.2%, and so on and so forth. Purely because of despite some of the companies giving a better numbers, but somewhere the fear of AI, fear of slowdown is likely to be. Who knows? Tomorrow there could be a deflationary pressure on the IT services software company purely because they are adopting AI. And I think we need to wait and watch. This is a very developing story. We need to wait and watch what happens there. As I was saying, the FPI turned positive, very marginal positive, 4,200 crore kind of a inflow that we saw from FPI. But DII, if you look at the numbers, I think you can see that the numbers are little shrinking. For example, in January, they pumped in 87,000 crore in the equity market, which came down to 64,000 crore. It further came down to 37,000 crore, and in the month of April, it was only 28,000 crore. So when I look at the FPI and DI, and when I look at net to net, I think somewhere we are almost near about 30,000 crore positive kind of a scenario which is happening. So despite FPI becoming more positive, DI inflows coming down, and net, we are basically near about 30,000 crore inflow monthly coming in to the market. Of course, having said that, YTD, the FPI continues to remain net seller near about 1 lakh crore purely because of their very heavy sellers in the month of Jan, Feb and March, and due to that they are there. On the other hand, DIA putting near about 2.2 lakh crore. So net in first 4 months we had seen near about 1.1 lakh crore additional investment coming in from the institution. That includes FPI and DI, which gives me on an average 25,000 crore additional investment every month coming in. As of 30th, not 30th April, sorry, I stand corrected because the data has not come as of 30th April. As on 31st March, the mutual fund were in a cash pile of near about 2.18 lakh crore kind of a stuff. So they continue to remain little watchful in terms of putting additional money. Indian market outperformed the US and the China. That's a good news. Why? Because SSE Composite, that is Shanghai Composite, was down by 1.7%. Dow Jones was down by 3%. S&P was down by 0.7%. Nasdaq fortunately was up by 1.52%, but Sensex, Nifty and BSE 500 almost made double the gain of what the Nasdaq did. And in dollar terms and rupee terms, India did better than the US market. If I have to look at first 4 months, and the reason I want to look at it, because if you look at it YTD till April, we have gone nowhere actually. Nifty 50 is up by 3% or so. And purely because the first 2 months has been very negative for the market, especially in the mid and small cap. Small cap went down by 9%, mid cap went down 7%. February was more brutal because the fall was across the board, large cap, mid and small cap. But there is some bounce back. But if you look at the quantum of bounce back which has happened, it's not so much in the mid cap, not so much in the small cap. Why? Because small cap is up in last 2 months only 9.5%, which is equivalent to January fall. It still need to cover February fall, and something similar is happening with the mid cap. Mid cap has covered some of the February loss, but still January still need to be recovered. But on the other end, the large cap has recovered, and we are in the positive on 2.92. So I think we are seeing it the market in different large cap doing better, mid and small cap not doing so great, and I think that's how the story basically is playing out. Indian market, India's market, despite the volatility that we saw in 2025, continue to trade at rich valuations, near about 26 times you can say, so trailing 12 months. And I think that's a concern for the very simple reason, because we don't know what's going to happen to the earnings, because there's a lot of global uncertainty, and if for some reason if the earnings takes a beating, then it could basically create a problem for the market. So we need to wait and watch. Right now, valuation doesn't look very cheap, keeping in mind the global economic outlook and the India Inc. commentaries. What we did, we basically bifurcated India Inc. into different P bucket. What you see in the yellow highlighted color is the market which is at least 20 P and above. If you look at it, the market, almost 50% of the market is commanding more than 30 P. And of course, if the growth is not there, then that PE is difficult to justify. Of course, I put number of companies, but don't give too much importance to that because it makes little sense. But if you look at the company which are less than 20, I think we are looking at 20-23% only. And of course, there are loss-making companies also 2%. So somewhere, I think the valuations, so it's not only aggregate, but if you further divide into a different kind of a bucket in terms of TTM/PE, whether it's a more than 50, more than 40 to 50, 30 and 40, I think this where the 29 plus 8, 37 plus 14, 51, more than half of the market still commanding PE more than 30. That doesn't mean that PE higher the PE, the company is not good. What I wish to convey that aggregate level, when you look at it, it does give some amount of a concern, especially when the earnings growth is not as robust because of the global uncertainty. So what happened to the March 2025 numbers, which has come down? Y-on-Y growth is only 0.4%. Almost half of the company have declared the numbers in terms of market cap. So we need to wait and watch. I would not be surprised if we see these numbers going negative also Y-on-Y. We will wait and see. I think by next 15 days, we will get some more clarity in terms of which directions we are heading in. And even if you look at the sales growth, it has been quite muted, if you ask me very frankly, a 6% growth Y-on-Y. And of course, the margins have increased, operating profit margins have increased marginally Y-on-Y, but when I look at sequentially, it has declined. I have not put that data. Maybe once I do the result analysis, that time we'll cover that more into that. So the line that you see in blue is not an announced number from FII. It is our, we spoke to some people in the industry to get this number. Our sense is that the inflow from the mutual fund would be very similar to March. And this is purely because of SIP. SIP must have saved the day for the mutual fund. But if you look at this, we used to get about 41,000 crore kind of a net inflow coming into the mutual fund, which has now come down to less than 30,000 crore. And this is the third month in a row, the data doesn't look very promising. So, of course, again, I repeat, the line that we blew is not announced. It's our sources, our indications. It could be high, it could be low. But what data we get, that when we spoke to some people in the industry, this is what the numbers we got from the industry sources. 26,000 crore kind of stuff, which is very similar to March. So somewhere there is a slowdown in the equity inflow purely because of, I think, the investors who are little, who could not stomach the volatility, seems to decided to take a wait and watch kind of a scenario, and 41,000, 26,000 crore is a substantial decline. It's almost like a 40% kind of a decline that we have seen, and I'm not talking about a very long period. It was in December 2020, it was 41,000 crore coming down to 26,000, almost 40% decline in last 4 months in terms of mutual fund inflow. As I told you, it's 2.18 lakh crore cash in balance with the mutual fund industry as of 31st March 2025. The April data will come in next few days, and we will get to that. Normally, how May normally performs? Well, normally May is good for the market. If you look at it last 10 years, almost 7 times the market has given positive returns in the month of May. Only 3 times, that is May 2020 purely because of COVID, and then May 2022 and May 2024. That is last year. GST collection, substantial growth, and March numbers you should always compare Y on Y as compared to quarter on, because month on month would always look better. So I think 2.37 lakh crore which is a record collection that India, the GST collection has happened. If you look at if you remember, we discussed about petrol and diesel concern. Someone basically suggested that it is because of EV. Had it been because of EV, then we would not have seen the spike that is happening in the month of March. So if you look at the spike which has happened in the terms of petrol consumption, 3174 going up to 3512. Okay, and at the same time, the diesel also increased from 7342 to 8000 metric tons. So there is a substantial jump that we have seen in petrol and diesel consumption in the month of March. My only worry is that this number looks like a spike. Sometimes doesn't gives me comfort level. You know, I would always prefer to have numbers more linear as compared to this kind of a spike. We need to wait and watch what happens in the month of April. The data will come out in next 7 to 10 days, and but my sense is that the numbers will further may not be so high as what we saw in the month of March. Crude oil price, it's a very good thing for India. Why? Because we were at $89 in last April. We are at 62 right now. Okay, and the trend is going down and down. So that gives you another comfort level. Why? Because for India imports crude oil, and which is beneficial for that. If you look at the electronic toll collection has been better as compared to what it was there in the month of March, which is another good heartening sign. Why? Because normally March you see more better activity. So this is a good sign for the electronic. Something very similar with e-well generation. Of course, just to tell you that this is for the March, this is not for the April, because the data comes with some lag. But there is an improvement that we saw from Feb to March, and which could also be explained why the GST collection has been better. Rupee has shown strength. It moved up by 2.3% against dollar in the month of March. It further increased 1.1%, and in the month of May till today, it's further up by 0.3%. So YTD, if you look at it in 2025, rupee is appreciated against the dollar. So sometimes, we make assumption, we get little fearful, and someone had asked me that you had predicted dollar versus rupee. Do you still believe that is going to hold on? And if you go back, and I said, yes, I do believe that it will hold on. So don't expect rupee will keep appreciating month after month. I do believe there will be a depreciation, but depreciation will not be as steep as what everyone else was thinking about it. What should we expect going forward before we open the floor for question? Indian commodity will definitely be very, very, people will look forward to that commentary. Like Hindustan Unilever has gone on the record saying that the first half of FY 2026 will be better than the second half of FY 2025, and so on and so forth. My only worry is that no one knows how the tariff war is going to play out. So sometimes, while the management has been very genuine and very honest in their assessment, but there is nothing there are many things which are beyond their control. Okay, and if that is something beyond their control, even if they wish to do, they cannot do that. So I think somewhere we need to. It's an evolving story. If you would have asked any Indian one, can you expect crude to be $60 per barrel, and 100 out of 100 would have said no. Okay, 100 out of 100. I'm not giving in 1% probability. So we are living in a very uncertain environment where how to project, how to basically budget, it becomes extremely difficult. So it's not that India doesn't have the tools or the wisdom or the intelligence. It is just that there are things which are beyond their control, and hence even if whatever they predict, a probability is very high that it may go little haywire. Why? Because of the changing global scenario. while there would be, India is not going to, accept the attack on the tourist as it is. I think there will be a retaliation from India, and as and when that happens, there could be a short-term volatility in the market, but we don't expect any major impact because of the first thing, we don't expect full-fledged war between India and Pakistan. And as and when some kind of a retaliation happen from India to Pakistan, market may get little jittery, but then it should be fine. And if you look at the historical event also, whether it's a Kargil or whether it's a what we call in 2019, I'm just forgetting the event. That time also the market did decline, but then basically moved up. What gives me a little worry, I'll be very honest with you, is that sharp decline in the crude oil price. And normally, if you look at whenever there is a sharp decline happening in the crude oil price, that does indicate that there is a slowdown in the global growth. And if that happens, I think it could impact the corporate earnings, and it also impact investor appetite for equity as an assets class. We saw a muted inflow coming in from the mutual fund, and that can further spill it over to the direct investment also. It's a all evolving story. Who knows tomorrow if US and China come on discussion table and start discussing to de-escalate this tariff war, the things can improve. But we don't know how it's going to play out, and hence we need to wait and watch. As I said, we are at 26 times trailing 12 months, so we are definitely not in a cheap territory, and which I strongly believe that the upside is limited. So what could happen again? I'm going back to my the earlier prediction. While the overall market may not give you, I think it's a time where you need to be a little stock specific. So if you happen to be in the wrong company at the wrong time, probability is very high that you might lose money. But if you happen to be in the right company, probability is very high that despite market remaining in a little narrow range, you can still make money. So we don't expect too much upside. At the same time, we don't expect too much downside also. As I told you, again, it's all depending upon who comes on the negotiation table, how the progress happens, and so on and so forth. We continue to believe that domestic theme should do well as compared to the export theme, purely because and there are a couple of reasons why I'm saying so. Domestic theme will play well. Number one, everyone got their April month salary, and because of this tax rebate kicking in, people have seen their take-home increase significantly. Number one. Number two, rate of interest coming down by 50 bips, which in turn means many people have seen their EMI coming down or will come down. And once your EMI comes down, your money remaining with you increases. So that's another way it can spur the growth in the economy. And third is the the crude oil prices, which has declined eventually. I strongly believe, and Mr. Puri has also indicated, that if the prices remain low, there is a possibility of a cut in the petrol and diesel, which could further give more money in the hands of the customers. We do believe that large cap will continue to do better. If you remember, Mohit and I came in front of you with the power raise on Saturday, and we did mention that while we don't see too much pain in the large cap, but we do continue to believe that mid and small cap can have some pain, and we are not changing our view. So don't get carried away by mini rally that is happening in the mid and small cap. I think they will continue to struggle purely because of global uncertainty. If global uncertainty is there, the large cap are better equipped as compared to weathering the mid and small cap. There is a strong likelihood that mutual fund inflows could moderate and amid heightened caution, and purely because of investors become a little risk averse now, and they are not want to do that. So when the flow comes down, it does impact the valuation. It does impact the market upside. There is a strong possibility, this is my personal opinion, that somewhere in the month of May or maybe the first week of June, the US and China will come on a discussion table. There could be some kind of a FII being sent by either of the country to come on the discussion table to resolve this tariff related issue, because neither is in the interest of the US nor it's in the interest of the China to have this tariff war. I have been reading, as I'm telling, that people have been asked to go on compulsory leave in China. Some of the factories have closed down, and so on and so forth. Even China will have a local compulsion to basically blink and come on a discussion table. Of course, these are all assumptions. How far each one has to play, they cards very smartly, but I'm very hopeful that something of that sort can happen either in the month of May or the first week of June. With this, let's open the floor. Happy to have your questions, please. Lakshmi sir is saying, hi, can you please share your views on the mid-cap stock? Will they perform well and is the negativity is over? Also would like to understand, are we still bullish on the private bank, power, pharma for 2000, bearish on IT? Thanks, regards. So sir, you have asked many questions, so let me try to answer. I think mid-cap, I was loud and clear that the pain period is not over, of course, subject to some companies here and there, but overall mid-cap do not expect too much gain to happen. So that's one. Would like to understand what we are actually still bullish on private bank. The answer is yes. Power, I'm not very sure. Pharma, again, I'm not very sure because we don't know how the pharma is again is a story of carry forward. In fact, yesterday I was in a gym and I happened to talk to one of the leading pharma company person, which is listed company. I don't want to name it because it's unfair on my part. And I was asking him, and he said, normally any tariff that has been imposed, the domestic manufacturer has to absorb it. Again, repeat, the domestic manufacturer will have to absorb it. In other words, your margin will take a beating. So I don't know. So it's all a function of what happens to the tariff war. I'm not able to read the mind of Trump, and hence, if I have to play little safe, I would prefer to avoid pharma for the time being. Bearish on IT, yes, we continue to remain a little cautious on IT companies purely because there could be deflationary pressure on the IT services companies purely because of the AI. Number one. Number two, I think some of the projects may go into a hold kind of a stuff by the US clients purely simple. Of course, they don't know how the economy is going to play out. So when you are not very sure of what's going to happen to the economy, you would rather basically suspend or put on hold your capex program, and that could hurt the order book of Indian IT services companies. So that's what my the assessment is. Mohan Kumar answer, is it worth considering having an alternate server offsite as a part of disaster recovery measures? Of course, sir. I think we do have. So are you referring to Markets Mojo? We do have a alternate server of for disaster recovery. So we do have, sir. Did you face any problem? Do let us know. But we do have that mechanism. So it's been taken care, sir, by our technology team. Priya Ranjan sir is saying, is it right time to start investing in IT and AI? IT not very sure. AI yes, but then I don't know which listed company is there. So I think let us wait and watch. IT services may see some kind of a headwinds. So I'm not very excited at this point of time. It is not that we are not excited as of now. If you go back to our 2025 prediction, IT did not feature in our top of the list. So in fact, it's not there as a recommended sector also. So I think it may continue to struggle. And plus, what happens? A lot of these IT service companies do have a lot of treasury in their books. When the rate of interest comes down, it does impact their other income also. And rupee depreciation was happening, now is appreciating. So again, there will be some kind of a impact on their margin because of the rupee depreciation versus rupee appreciation. Adil Singhai sir is saying impact on the Indian market for what happens with India and Pakistan. It will be temporary. If at all there is a war, we don't expect full-fledged war. There could be an attack inside the Pakistan territory to teach the lesson maybe on the terrorist camp. We don't expect full-fledged war happening between India and Pakistan, and hence any impact which could be temporary. In the case if the market does go down because of this tussle between India and Pakistan, use that as an opportunity to put more money to equity market. Sri Hari, what will be the impact on market if there is a kinetic war between Pakistan for extended time? So I don't know. And what is the I don't know what is kinetic war, sir. Sorry, this term looks to be very technical to me. Is there something called kinetic war? I don't know, sir. So I need to Google search that to really figure it out. But my sense is that The if at all there's a war, I don't know what kinetic. What is let me put what is kinetic war. So I'm just using Chat GPT now, uh, and let me understand what is it. Okay, is in quantity with often considered by hybrid or okay. It's basically normal war. That's what they are saying. Basically, this war includes sectors of airstrike, ground battles, naval weapons, and the term kind of emphasizes physical, forceful interaction. No, sir, I don't. If there is a kinetic war between India and Pakistan for extended time, first thing I don't believe that's going to happen for extended time. If at all that is going to happen, assume that what we are saying is right, Sri Hari sir. The market will react negatively for some time, but then it will move on. What happens to the Russian market? What happens to the Ukraine market? What happens to the Israel market? I think the war is there into war for extended period of time, but it's not reflecting somewhere in the stock market indices. So don't get read too much into it. So my worry and my question to all of you, my submission to all of you is that please do not give too much importance to this India-Pakistan war-like situation. As and when it will happen, it will have a temporary impact. But your investment decision should not be function of that. No one talks about Kargil. It was a very quite a bloody war that we had with the Pakistan. We had this attack on 2019, and that was a quite this one. But no one talks about it. So if you're a long-term investor, clearly, I think this events will be people will forget very soon actually. So you may not ask me this question 3 months down the line also about this India-Pakistan a kinetic war like of situation. Mohan Kumar sir, no, I have not faced any problem in logging in. Anyway, I'm happy that you have disaster recovery measures in place as a part of risk management. Yes, sir, we do have. In fact, it is not now. If I memory serves me right, I think we started having this something in before COVID. So just to ensure that we don't run into a problem. So that's it there. Thanks a lot, sir, for clarifying this. That you don't have not faced any problem in logging in. Ravinder sir, we get emails to subscribe to your various offerings. I suggest a presentation be given of the various salient features and option screen available in Mojo One, etc. So we can appreciate the advantage of Mojo One and help us to take a decision to subscribe or not. Point taken. I'll definitely ask my colleague Jason, will be in the front of you. So tomorrow, stock of the week is a very small presentation. Maybe on Wednesday when he comes with Mojo One, I'll ask him to make presentation on that. I don't know, since you are not a paid member, and Mojo One would be only for the paid members. Am I right? So what I'll do, I'll ask Jason to reach out to you. Someone from his team can reach out to you and explain the features. Jason को भिजवा दीजिए. Please ask someone to get in touch with Ravinder sir. We will do that, sir. Point taken. Badrinayan, April DII investment fallen, turnover increased to 1 lakh crore. Does it mean that HNI played well? I don't know, sir, because see what we see the numbers on DI and FIIs and net inflows. So that means net inflow is matlab buying and selling. Now they must have bought more and bought sell also. Am I right? And net would be minimal. So it's very difficult to say that HNI played well. But remember, almost 40% of the volume in the market is accounted by the retail investors. And of course, then there is a prop book and this one. But so FI and DI have never been the big players in the market on a day-to-day basis. If you look at the data, is all available on SE website. But if you want, maybe I can present this data. मुझे भिजवा देना ये. I'll present this data to all of you to get a sense of who basically from what percentage of market in terms of volume. Retail investors are one of the largest. So if the volume would have gone up purely because of retail investors, partner, not because of DI, FI. That's what my sense is. Mohaz sir, good evening. What is the take on mid and small cap stocks? Will mid cap, small cap index all-time high level in 2025? Right now looks little difficult, sir. Mid and small cap may struggle very in line with what we have stated in January 2025. And first 4 months have played out exactly the way we had predicted. Looks difficult purely because of global uncertainty, purely because of valuations being reached. Number 3, people are not in a mood to take a risk on strategy. That does impact the valuation. And number 4, I think if you look at the mutual fund inflow, Just go back 6 months back, and most of the money used to come in mid and small cap within the mutual fund overall basket. That money seems to have come down. So what happens that when the liquidity stopped chasing the company that used to make money, used to see the price appreciation, it does take a beating. So my sense is that looks little difficult seeing all-time high in 2025 for mid and small cap. Sandeep Das, good evening. We are all looking forward to banks and NBC driving Nifty this time, but doesn't look like. Also, valuation of Bank Nifty seems fair, not too high and definitely not cheap. Also, suddenly IT has taken steam. What are your sectoral views on? Still believe banks, infra, and consume this year? Your views? So, sir, I don't know whether you attended my my slide which I presented for the month of April in terms of sectoral. So, if I don't know whether it's visible, my screen is visible. So, if you look at this data, okay, in the month of April, the Bank Nifty is on the top of the league, 6.83%. Nifty consumption 5.56, Nifty FMCG 5.33, Nifty Finance 4.1 for outperforming the Nifty and Sensex both. Infra is again outperforming 3.88. So I don't know why you are saying it's not being played out. And what was the last question, sir? जब वापस refresh करना वो सवाल. And you are saying also suddenly IT has taken a stream. If you look at the Nifty, IT is down by 3% in the month of April, sir. So I don't know where you are basically. We continue to believe banks should do well. We continue to believe infra should do well. We continue to believe consumption should do well. And consumption will see further boost purely because of income tax relief, rate cut, and that will basically bring down my and your EMI, which in turn would have more money, disposable income for you to spend. So I think that's how it's going to look at it. So we are not changing our views on banks, finance, consumption theme, or infra/capital goods. Ajay, personal activity taking priority over professional commitment. I don't know, sir, what are you referring to? Are you referring to that our offsite that we have done, and because of that there's a 1 day delay in terms of launching the stock of the week, sir? We need to allow some exceptions sometimes, sir. It's not that it has become a trend. In fact, we have visited or we did offsite, after almost 4-5 years actually. We did before COVID, and our staff do need some amount of a break also. On the contrary, many times we are basically sacrificing our personal life and coming in front of you. You would have seen many times we are coming in front of you on Saturday to the webinars. So it's because of, sometimes, in life, one exception, we basically tend to come to conclusion. Is this the exception? Is this the rule? And sometimes you need to be a little reasonable also with us, Ajay sir, in terms of passing this kind of a comment. For us, customers are supreme, and in fact, in our offsite, the one thing that Mohit spoke loud and clear to each and every members of Mojo family is that the customer comes first, and our business interests, and that's what the ethos that we believe in. Sarang, can you please share your view on mid-cap stocks? Will they perform well as the negativity is over? I think I did answer that question. Is the third question. It's very similar. My answer is no. It looks like still there is a more pain left in mid and small cap. Also, would you like to understand how are you still bullish on private bank, power, pharma? And yeah, I think this. ये क्या है? Hello, सारंग का नाम है, लक्ष्मी का सवा. I don't know what is happening. Amir, चाय नहीं पिया? Can you now cover investment in silver? You outlook of silver to that. So. Okay, one disclaimer I would like to put. I did buy silver on Akshay Tritiya. Okay, I do believe, and in fact, if you remember, I did make a presentation on gold-silver ratio, and that gone quite substantially. Historically, as and when the gold-silver ratio goes, there is a spike. Normally, silver does better 1 year down the line as compared to the gold. So my sense is that silver. So if you go back to our January outlook 2025, we did mention that silver should outperform gold. And we continue to believe that silver should do well as compared to the gold. So my outlook, yes, please go ahead and buy in case if you don't have underexposed to the gold and silver. Remember, as in part of assets allocation, it should not be more than 15%. If it is less than 15%, please go and do that. Just a disclaimer, again I repeat, I did buy on Akshaya Tritiya few kgs gold, few kgs silver, sorry, as a part of my overall assets allocation. And of course, buy silver through ETF, don't buy silver in a physical, because physical is a little, it's become a little bulky kind of a stuff. Yeah, go ahead. Vijay, is government minting money by not reducing crude and diesel prices? You are right, sir. I think government is making money by logically. So on paper, the price of diesel and petrol are deregulated on paper, but somehow it is not in real life. My sense is that they will reduce the price. If you ask me, it should happen in this quarter only. The price of petrol and diesel should come down, because the kind of price fallen that we have seen, almost $90 to $60, is a substantial decline. And logically, government should. Now, one argument could be that they want to keep some buffer because of economic global uncertainty is there. And if that is so, might as well keep some buffer in case if they wish to spend some money more on keeping the economic activity humming, then they need some money. Am I right? And that's the way the thought process could be. But logically, there will be some relief we should expect coming in from the government on the petrol and diesel prices. But you are right in terms of your observation that government is making money right now by not reducing the price of petrol and diesel. Ganesh sir saying, is it possible to add electricity consumption also doing along with the petrol diesel? I think it's a good suggestion. मुझे जब forward कर देना, विजिल को भी forward कर देना, we will definitely try to put it, sir, so that it's a fair point. The only thing we need to happen, I think we'll get it from the CA side. So I think it's possible, we will put it. Soma Sundaram sir, is in wires and cable industry due to new entrants by big corporate, we saw price correction today. Most of the wire and cable went up by 10 or more. What has changed now? It's just the sentiment, sir. See, the fact of the life is that new players are coming in. The fact of the life is that when the new players come in, it does impact the margin. It does impact the growth. We have seen that happening with cement. We have seen that happening with paints, and it will happen with the wire and cable. Another problem with the wire and cable business, it's not very brand business. Okay, and it's more of a commodity business kind of stuff. Despite some of my colleagues from the wire and my some of the friends from wire and cable business may not like my statement, but it is a commodity business, and hence not expecting they will not get impacted if the new place comes in would be little too much to expect. So my sense is that if it has went up by 10%, if you feel that I made my money, it's a time for me to lock in profits, please do lock in. That's the way you should look at it. I'm not recommending buy or sell in any company. I'm saying if you feel that your whatever the price you were looking for has come in, you can decide to lock in. But remember, when big corporates comes in, they come with the deep pockets. They want to gain the market share. They can actually adopt a very aggressive pricing strategy, which in turn could be a very, 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 very harmful for the incumbent players. We have seen that also happening in the telecom, where Jio came and it did create a lot of problem for the incumbent players at that point of time. And today we have only two more players from the private sector other than Jio in the telecom. But before Jio coming in, there were so many players in the industry. Am I right? Samath, hope you are doing and so the market, as you know, there is a cyber attack from Pakistan going on website. Hope market is safe and from such attacks. How is the cybersecurity? So Samath sir, I think there's a second question coming in, and we do have the backup on that. So in case if something has to happen, you will not see Markets Mojo website down and out. We will be up and running in few minutes or few seconds. But since you again asked me, again let me send an alert to my tech team just to ensure that nothing goes wrong with our security. मुझे वापस ये भिजवा देना ये सवाल. I'll just take up with my tech team again, sir. Tapan sir is saying, earn substantial amount of money after investing in Mojo recommended stock. Thanks, Mojo team. Is there any growth expected in data center sector? Thanks a lot, sir. Tapan sir, we've been very candid enough to admit that you did make money because of our recommendation. I think also, luck also plays a part, and you should also give some credit to your luck also. Is there any growth expected in data center sector? Yeah, definitely yes, sir. There will be a growth happening in data center sector. The only thing, I don't know which companies are there in a listed space where you can basically play that growth. So that's the only challenge that we have right now. Varun sir, what is your view on gold? So I think whatever we predicted in the beginning of 2025, that story is played out. So from this level, risk reward is not in a favorable of gold. So should we expect double-digit returns from here in the rest of 2025 in gold? The answer is no. If given a choice, I would rather buy a silver as compared to gold at this level. Ajit is saying study to invest now, staggered or lump sum. Depending upon what is your time horizon and what is it actually. If your companies are good, maybe go at one go. If you're not very sure, you are little not risk averse, you don't know what's going to happen, market volatility does impact you, adopt a staggered approach. So there's nothing called one size fits all in the investment world. Everyone has a different kind of a risk appetite and so on and so forth. So if your risk appetite is fine, please go ahead and once go. If your risk appetite is not so fine, please do it in a staggered manner. So Amir is saying, is it time up or no more questions? Time up. थोड़ा ले लो यार, एज इट इज कल लास्ट वीक तो मैं था भी नहीं इनके सामने. विल टेक एटलीस्ट 6-7 सवाल ले लो. चलो लेट्स, आई नो यू नीड टू रस्ट बेसिकली, पर ले लो यार. सॉरी, जो जितने आए उतने ले लो. चलो बस. Mahesh sir, I am invested in HDFC and HUL in large quantities for long term. I am also planning to invest more in PMS on SIP mode. What's your view on the same? So sir, I will not be able to comment on the company specific because my compliance team doesn't permit me to speak company specific. So sir, please excuse me. As far as investing in PMS in SIP mode, you can definitely do that. Nothing wrong with that. Instead of doing monthly, I would suggest you to do quarterly so that we can do proper allocation to the stock. Because what will happen, our system will pick up based on investment of money available. We don't want to have a tail stocks or other thing when that. So when you invest in 3 months, the amount would be little bigger. So by virtue of that, we may not have a tail stock in the portfolio. Company specific, please use a score on our website to take a call on that. But having said that, you know that our view on the private sector bank is bullish. You know our view on the FFC sector is bullish. Jayan sir, please do not answer personal questions related to commitment exercise. I have been Mojo member for several years and your and MMT community is extremely appreciable. I have learned a lot and benefited immensely. In life, sometimes personal events may take priority on an individual level, but cast unfounded aspersion on occasional absence is unwarranted. Also, such questions are a waste of time and real value questions get left out due to time running out. Thanks a lot, Jayan sir. See, sir, sometimes people do say that people don't take questions with a little negative or criticizing you. And we keep saying that we are very honest and transparent. If someone has a difference of opinion, even criticizing us, we will more than happy to take that question. It's a perspective, it's a view. And in a democratic setup, we need to respect other people's view also. Our job is to come in front of you in a sincere manner, honest manner, and say what it is. If I would not have saw offside, you people would not have known also. The very fact that I came in front of you suggested that we did an offside, and that's why we had, we could not release stock of the week on Monday, but Tuesday. So we do that. We do in a very honest manner. Some people like it, some people do not like it, and that's a part of life, JNG. So I don't think we need to get too much put about it. We appreciate criticism, and if it is fair, we accept it. If it is not fair, we give our point of view. And thanks a lot, Jayan sir. Data center, please check Deepan Mohant Mehta podcast where he mentioned data center opportunity for BSE listed company. I got your point, sir, but if you look at the valuation that we are talking about within the BSE, the data center is not so very big actually. In fact, there is a news that BSE is hived off the data center, but it's not a big number. So when you look at the scheme of things, I don't think it's going to be a big substantial, the kind of market cap that BSE is covered. But nonetheless, since you've asked me to check, again I'll recheck, and if I'm ignorant something, I will definitely try to remove that ignorance. Please forward me this question also, Nitin Sarka. I'll definitely look at it, sir.
Done, sir.
So with this, we're done every question, am I right?
Yes.
So I'm happy that we could take up each and every question being asked today. Thanks a lot everyone taking time out and attending this webinar. I thoroughly enjoyed your question and I also enjoyed answering them actually. With this, again, I'll be in front of you, not only you, but the previous customer on Thursday with our report card, because the first Thursday of the week, and we do present our report card to all our PMS customers. And for others, rest of you, I'll see you next week. Good night. Take care.